So Tesla missed earnings, obviously. You could see the stock dropping this morning and the media is not helping. And of course, it's all in the news. It's done with the growth and blah, 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 blah. No, it just had a bad quarter. They had shut down the Shanghai factory and the Austin, Texas factory because they had to revamp it for the new models coming. So that takes production away. Anyway, so today we're talking about the earnings call, but first I want to give you just a couple of good news and what happened the last few days. So stay tuned. So Tesla missed earnings. We knew that because, after price reduction and the lower delivery numbers after they had to shut down the Shanghai factory and the Austin factory, of course we knew it was coming. So today we're talking about earnings and a couple of great news that happened in the last days. So welcome back to my channel where I give you the latest Tesla news. The Tesla Supercharger is a 480-volt DC fast charging station built by the company specifically for its electric vehicles. These stations have been key in enabling long-distance travel for Tesla owners and encouraging to the adoption of electric cars, of course. The automaker is now taking another step to improve its charging infrastructure, which is so smart. According to Electrek, Tesla is starting to develop its new V4 Superchargers in the US. These next-generation charging stations are essentially for the upcoming Cybertruck and to accommodate other EVs. At least 3 new V4 supercharging stations are currently under development in the US. They are built in Wilsonville, Oregon for now, and Sparks, Nevada. Tesla is retrofitting existing V3 supercharger stations to incorporate the new V4 stalls, complete with new payment screens and the magical dock feature. The new V4 superchargers come with a cable that is 3 feet longer for larger vehicles like the Cybertruck. Also, other EVs might have a different position for their charging port. Now, awesome, right here. Better late than never, BMW to adopt Tesla's supercharging plug. The war over the kind of charging plug that EVs in North America will use has been won. Yay! Another automaker has come into the Tesla fold, but a few companies are still holding out. BMW announced it would adopt the North American Charging Standards, or NACS, for its battery electric vehicles in the US and Canada starting in 2025. NACS was created by Tesla and is essentially the Tesla plug. So here we go, Tesla Q3. But first, some positives to take away. So number 1, Tesla remains hyper-focused on EI. Number 2, Tesla's energy division is now Tesla's highest margin business. And number 3, Cybertruck is moving forward. It might be late, but it's coming. And of course, the challenges are growth in 2024, margins, and uncertain macroeconomic forecast, which Tesla has no power over, so we just have to see what's going on in the future next year. Tesla reported quarterly earnings and sales that missed Wall Street expectations Wednesday, but crucially showed gross margins that were within forecast. Tesla earned $1.85 billion, or 53 cents per share in the quarter, compared with $3.3 billion, or 95 cents per share the year previous. Adjusted for one-time items, the company earned 66 cents per share. Revenue rose 9% to $23.35 billion. Analyst survey by FactSet expected Tesla to report adjusted third quarter earnings of 73 cents per share, sales of $24.2 billion. So, it's a miss. Gross margins were 17.9%, a drop from 18.2% in the second quarter and 25.1% in the third quarter of 2022. Investors have focused on Tesla's gross margins amid several rounds of price cuts. Some Wall Street analysts have estimated that deliveries of tens of thousands of cars will be shifted to the end of the year due to the longer than expected downtimes in factories in Shanghai and Austin, Texas. Tesla shares have more than doubled this year compared with the advance of around 13% for the S&P 500 index SPX. Tesla's profits tumbled 44% in the third quarter as the impact of steep price cuts and the company's lineup continued to take a toll on the EV maker's bottom line. Revenue was up 9% to $23.4 billion, lifted by higher vehicle deliveries compared to the same a year ago in the same quarter. The $1.9 billion in net income for the July to September period missed analyst expectations. So, Tesla also gave an update on the long-delayed Cybertruck, saying it expects to begin deliveries in November. And of course, CEO Elon Musk is under pressure to update investors on how the company plans to balance growth with sustainable profitability in the quarter ahead. Tesla is thinking about stimulating demands for its aging models, some of which have not had minor refreshes in recent years, by leaning more on price cuts and other sales promotions. And Tesla deliveries, while up 26.5% year over year, in the third quarter have missed analysts' expectations. Its sales growth has also tapered off, with vehicle deliveries to consumers down 6.7% quarter over quarter. Tesla attributes the decline to planned downtime for factory upgrades, and as you remember, in China, Tesla's growth has been further challenged by an intensifying price war in the EV market and the rise of BYD, a competitor that is closing in on Tesla. Tesla stock has more than doubled in 2023. Musk has reassured investors that Tesla's future software, including autonomous driving technology, will eventually help generate generous profits. The company's closely watched automotive gross margin, including regulatory credit, is expected to fall to 17.5% in the third quarter, according to Morgan Stanley's analyst Adam Jonas. That margin was 26.8% in the third quarter of 2022. So, Tesla will need to deliver more than 475,000 cars and SUVs in the final 3 months of 2023 to achieve its goal of selling 1.8 million vehicles this year. Tesla reported Q3 diluted non-GAAP earnings per share Wednesday of 66 cents, down from $1.5 a year earlier. Analysts polled by Capital IQ expected 73 cents. Revenue for the quarter ending September 30 was $23.35 billion, up from $21.45 billion a year earlier. Analysts surveyed by Capital IQ expected $24.14 billion. Automotive revenue up 5% year over year at $19.6 billion. Tesla reported third quarter production of 430,488 units and deliveries of 435,059 units. Adjusted earnings per share of 66 cents missed street consensus estimate of 73 cents. Operating margins 7.6%.
Tesla's profit tumbled 44% in the third quarter as price cuts continued to take a toll on its bottom line. Revenue was up 9%, lifted by higher vehicle deliveries versus a year ago. Tesla's energy store deployments increased 90% year over year. The company also said that Cybertruck deliveries remain on track for later this year. Shares are lower after hours.
Tesla ended the third quarter with 5,595 Supercharger stations and 51,105 supercharging connectors, both up 31% year over year. Solar deployed in the third quarter was 49 megawatts, which was down 48% year over year. Energy storage was 3.98 gigawatts per hour year over year, up 90% year over year. Operating income was impacted by expenses related to the Cybertruck launch, investments in artificial intelligence, and other R&D projects. Energy generation and storage revenue was $1.6 billion. Tesla ended the third quarter with $441 million in digital assets, down from $465 million reported in the second quarter. So, what's next, you might ask? The company implemented many upgrades in the third quarter to help boost production going forward. We continue to believe that an industry leader needs to be a cost leader, the company said. During a high interest rate environment, we believe focusing on investment in R&D and capital expenditures for future growth while maintaining positive cash flow is the right approach. Also, the company said it more than doubled the size of AI training compute to help grow the data set and Optimus robot project. Tesla said Cybertruck began pilot production in the third quarter at Giga Texas, with deliveries anticipated for November 2023. And also the company expects the Model Y production to increase in Texas gradually. The company remains full-year guidance of 1.8 million vehicles produced. Tesla says Cybertruck deliveries remain on track later this year. In addition, we continue to make progress in our next generation platform. I just want to temper expectations for the Cybertruck, Elon said during the call. It is going to be 1 year to 18 months before the Cybertruck turns in a cash flow contributor, and there will be challenges to reach volume production. Also, it is not demand, he added, and we have to make it affordable, he said. Musk said he's expecting Tesla to produce 250,000 Cybertruck by 2025. He also said that this is very challenging since it is a brand new product. It will be interesting to see what happens in Tesla's Q4 earnings. Will Tesla be able to achieve their 1.8 million vehicle goal? We'll see. What is your opinion? Do you believe Tesla can still achieve this goal? You can leave a comment down below. So thank you so much for watching. I will see you in the next video. Goodbye.
And I think the problem is that the street wanted to get details. Have the price cuts ended? Where's the gross margin outlook? What does demand ultimately look into 2024? And instead, it was really Musk putting on his macroeconomist sort of hat. And that's not what the street wanted. I think it was lack of details. And ultimately, it was a somber note for, especially when it looks at Cybertruck and you look at the margin outlook. And I think the long-term thesis is still there. But with no rose-colored glasses, I mean, this was definitely what I'd call a disaster.
Would you expect